Ever wonder if there is a way to significantly reduce your property tax bill, especially if you have a larger parcel of land? Imagine the financial relief if your property could be assessed at a much lower value. Yes, your property may absolutely qualify for an agricultural exemption, but it depends entirely on meeting very specific criteria set by your local and state tax authorities. These exemptions are designed to encourage agricultural activity and preserve open spaces, offering a reduced property tax assessment. The core reason for these exemptions is to value land based on its agricultural productivity rather than its potential development value, which is often much higher. This significantly lowers the taxable value. Key factors typically include the land's primary use, meaning it must be genuinely used for farming, ranching, timber production, or horticulture. Many jurisdictions also requiring a minimum acreage, often ranging from 5 to 10 acres, and sometimes a minimum annual income generated from agricultural sales to prove it is a bona fide commercial operation, not just a hobby farm. The intent behind the use is also crucial. Tax assessors want to see a clear commitment to agriculture, which might involve a history of active farming, soil conservation efforts, or participation in government agricultural programs. Some states might also consider the type of animals or crops raised and the intensity of the farming operation. It is a system designed to support working farms by reducing their tax burden. To determine if your property qualifies, your first step should be to contact your county or local tax assessor's office. They can provide detailed information on local requirements, including minimum acreage, income thresholds, and acceptable agricultural activities for your specific area. You will likely need to submit an application and provide documentation such as farm income records, receipts for agricultural expenses, or even a detailed agricultural management plan for your land. Be aware of what are sometimes called rollback taxes. If your property receives an agricultural exemption and then changes to a non-agricultural use, you might be required to pay back the tax savings from previous years, often plus interest. This is designed to deter people from temporarily claiming the exemption without genuine agricultural intent. Understanding these nuances can save you from unexpected costs down the road. By proactively investigating agricultural exemptions, you could unlock substantial annual property tax savings, making land ownership more financially manageable and supporting the preservation of valuable agricultural land. It is a smart financial strategy for property owners who meet the specific criteria, turning open land into a source of savings and economic benefit.